So these upcoming Xi-Biden talks, how closely are you going to be watching them, and how important potentially could they be on markets? And I ask because for President Biden, right, who is in a pretty tough position now, polling at or near record lows with his party, the Democrats, on the back foot, and with midterms coming up and dealing with this whole inflation problem. One strand of that is trying to or talking about easing or rolling back some tariffs on China. That's got to be something that you're listening out for from these talks.
Well, I think it's potentially one topic's on the cards. But I think at the same time, if you look back to the last, 4 to 5 weeks, we've heard a lot about, on the U.S. side, the potential to roll back some of these tariffs. But at the same time, a lot of research has been done to show that the impact on actual inflation is likely to be quite limited. And that's assuming that along the supply chain, companies will fully pass on those tariff savings to consumers. So I think, it's going to be a very important or very delicate calculation in how to get the maximum benefits from reduced tariffs to reduce headline inflation, but at the same time, still seen to be playing tough on China. So I think that's going to be a very delicate balance for President Biden to strike.
All right, let's talk about central banks if we could, of course, because, next week, less than a week's time, we've got the FOMC coming up to bat, and the odds are now it's gone down from 100 basis points down to 75, what a lot of Fed officials are trying to telegraph, right? Before that, though, tonight, Asia time, we've got ECB, first liftoff in rates in about a decade. Odds there have also dialed back from 50 before to maybe 25 now, and ahead of that, coming up in just, 3 hours or so, we've got the BOJ, which is likely to be constructive for markets, but also priced in, not likely to do anything at all. My question to you is, Europe side, if the ECB does end up going 50 rather than 25, then what happens?
Well, I think the ECB is in quite a challenging position because if you look at the Fed, there's a very clear case to bring policy rates back up to neutral as quickly as they can, and that's why they're moving in 50s and 75s. But for Europe, obviously, they have a single mandate of controlling inflation and price stability, but I think they must have one eye on the prospects of the economy being threatened by potential energy supply disruptions further down the line, because there's still a huge uncertainty whether Russia will continue to supply natural gas to many European countries as they build up their inventory in preparation for winter times. So I think the ECB, well, rightfully so, is looking to raise interest rates to cool inflation today. But I think they have to contemplate with the prospects of weaker growth as we proceed through to the later part of 2022 and really going to 2023. So I think they're in a much more of a catch-22 situation compared to, say, the Fed or the Australian Central Bank or even the Bank of England.